Ladies and gentlemen, good evening. This is Christopher Aaron. Thank you for taking the time out of your schedule today to listen to this broadcast. There is some important information that I would like to share to you. We will be doing a detailed analysis of the gold market in this video. And the other thing that we will be looking at is the trajectory for gold coming up here over the rest of this year. A lot of detail coming up in this broadcast in the only form that matters. And, there's been quite a dip in the cryptocurrencies over the last 4 weeks or so. Bitcoin has lost half of its value, according to Bloomberg here that I'm following on a regular basis. And I just wanted to say, if you are investing in the cryptos, I did make a video about 2 weeks before this dip started in the cryptos to warn people. And it's just to say that there is an asset class that has never gone to zero and will never go to zero that you may want to choose to diversify some of your profits into while you still have the opportunity. I'm not telling you what to do. I'm just telling you what I would do if I was sitting on profits in another asset class. And that is the precious metals. They are very attractively priced at this point. But once again, I do not sell the metals. And if I think the metals are going to go lower, I alert my subscribers to that when I think that is going to happen. Because that is the nature of my business, is simply to provide the most accurate analysis possible. Nothing more and nothing less. Let us look at the charts. So we begin by looking at the price of gold. Now, we've been expecting this high to form in gold, which appears to be forming now. We've been expecting this for a number of weeks. It's been a little bit elusive. There's been some gyrations around the levels that we've been monitoring here. But this looks to be the interim high that we were talking about over the last several weeks. It looks like the high will be right below 1345 in the spot market. We'll put this in perspective just a moment. Switching over to silver, similar kind of scenario, and we were wondering over the last few weeks, would silver pop through the 1750 level? Because we saw a whole lot of sellers here at the charts in October and November, and gold was able to pop through that resistance zone quite easily. Silver was not able to, so we were wondering, would silver follow and just go boom and pop higher? It did not, so we have some lower targets for both metals coming up over the next several months. Let's look at those metals sequentially. The backdrop of this, if you think I'm being overly bearish at this point, I just want to tell you this is the major macro backdrop, which is that commodities, we're talking about the average of all commodities that trade around the world, including gold and silver, platinum, palladium, copper, aluminum, zinc, oil, natural gas, the soft commodities, the agricultural commodities. We are just coming off the lowest values that have been seen in 40 years, over 40 years. Commodities cannot go to zero. That's the difference between stocks and, for example, currencies versus commodities, right? Stocks can go to zero. A company can go bankrupt. Currencies can go to zero. It's happened before. Look at Germany and the Weimar Republic. Look at the Zimbabwe dollar. Look at the United States dollar during the Civil War. The greenback went to zero. Commodities cannot go to zero, yet this is the lowest that they have been valued in over 40 years. So this is not, we're not talking a quick trade here, but this is the macro backdrop for what will be setting up here over the next decade. And this is why I'm involved in the commodities. This is why I'm investing in the commodities. There is something special happening here in the precious metals. And we can see we're looking below this, the prices of gold and silver versus the commodity complex. So we can see times in which the metals are moving similarly to the commodities, and we can see the times since the mid-2000s when gold and silver are clearly outpacing the commodity complex. So there is a return to sound money as the overall commodity complex is now just rounding off its 40-year lows. Tremendously powerful backdrop if you are a contrarian-minded investor and you're not trying to trace Apple stock or Nvidia higher at this point. Let's look at gold very detailed. Now, the analysis that we do here on the gold market is technical in orientation. And that means simply all we do is we're looking for patterns. Where do the buyers and where do the sellers show up? Where have we seen them in the past? Where are they showing up today? Human beings move in patterns. We may not want to admit that, but they do. And the markets are a function of human behavior. So we are looking here at the price of gold. And we are saying, where are these human beings moving with relationship to gold? What can we learn about the sum of the human beings investing in gold right now? Let's look at it. There's a few indicators that we watch. On the bottom here of every chart, just to let you know, is volume. This is the number of contracts that are being traded on a given day. Generally, the higher the volume, the more important the move that it is that we're talking about. On the very top, this is called the relative strength index. This is a momentum indicator. It's not perfect. No indicator is perfect. But we're looking at a mathematical formula which we can plot on this chart, which calculates how strong the momentum is in the market at a given time. So we can see right now the momentum is fairly high. On the bottom of the chart here, we are looking always at gold versus the broad basket of commodities that we just spoke about. So we are looking to see, is gold moving, for example, is gold moving higher than the rest of commodities as it was for the first half of 2017? Or is it moving flat? In other words, if it's moving flat against commodities, this move right here is entirely attributable to the commodity sector. This looks dramatic for gold itself, but when we look at this ratio here, we're seeing that these gyrations are entirely attributable to commodities, not to gold itself. So we're trying to figure out here as precious metals investors, when are we seeing significant movements in gold itself? A lot of people ask me when I'm looking at the precious metals markets, do I pay attention to moving averages? And the simple answer is through many years of study, I have chosen not to. I do not pay attention to moving averages. Why? Because in my study, in my trading, in my investing, they do not work. Now, if they work for you, bless you, and please use whatever system works for you. They do not work for me, and let me show you why. So we're looking at the 200-day moving average here in orange and the 50-day moving average here in blue. For gold, the exact same chart that we just looked at, gold from late 2015 through the present. And theoretically, moving averages are supposed to provide support. So if we want to follow the 200-day moving average, we're supposed to find places where gold bounces off of the 200-day moving average. It just looks to me like gold slices through this thing in any which way that it wants to. And even more so for the 50-day moving average. I mean, are there occasional points where it hugs the moving average? Yeah. But I do not see anything that is usable here as far as trading or investing goes for my analysis. Once again, if it works for you, use the system that works for you. I simply publish the research that works for myself and a number of colleagues that I work with. So I'm going to get rid of the moving averages. You study what works for you and what does not over a period of time. You get rid of what does not work, and you return to what works, what establishes the balance of probabilities in your favor. That is all that we can hope to do. So what works for me? Let's bring up this key. I like to use a lot of pretty colors. So all the colors that I use here are going to be what is shown on the charts when we analyze the gold market. And you're looking at this and you're saying, what the heck is happening here? We see all these wild gyrations. Is this a top? Is it coming back down? Is it going to crash? Elliott Wave says this is a third wave and it's going to crash. Other people are telling me gold's going to $5,000 this year. What the heck do we make of this? Indeed. So let's use some rational forms of analysis here. This is what works for us here. We begin by drawing very simple trend lines. Trend lines must come from important lows. This is the key point. So we had a major multi-year low forming here in the price of gold at $1,045 per troy ounce in December of 2015. We draw a simple trend line from this low through the next major low that we form, and we can see this trend line is still rising presently. It came close to being hit here twice over the last year, did not get hit precisely. This is blue, primary trend lines. What else can we notice? We had a long-term magenta color, long-term declining trend line. Now, we are not showing the long-term chart here. We've seen that many times on this channel. Suffice it to say, this trend line extended all the way back through 2011, through the absolute peak. And we can see from the $1,900 per ounce peak all the way down through these 2016 peaks, 2017 peaks, a bit of a false breakout here. Always be on the watch out for this. If you are a technical analyst, always watch out for false moves. They can reverse quite strongly. We had a false move followed by the real move here. Coming back over the last several months and retesting. Now, this is therefore a broken trend line. The magenta color, the long-term trend line is now broken. This is not the valid trend line. So we will eventually change this to the turquoise color. For the purpose of this video, I wanted to leave it the original color just so you can watch it. So what happens when we have the meeting of a broken trend line and a valid trend line? Two enter and only one can leave. Which one leaves? The one that wins out. So in this case, the rising trend line has won out from the declining trend line, right? So blue extends higher over the course of 2018. This is our worst case scenario, another bounce of the blue trend line here for the price of gold. Now, we are not only looking at trends, we're also looking at where did the important peaks come into in this market. So let's look at a few very important ones. We're talking about black now. Horizontal support and resistance peaks. Very first one, very important. The summer of 2016 peak at $1,378 an ounce, shown right here in black. All we're talking about, think about this fundamentally. All we are talking about is a lot of sellers showed up here in the price of gold in the middle of 2016. A lot of sellers showed up. And what happened then? The price of gold retreated. So it is important for us, even if you believe that the gold market is manipulated, which I do too, but it is important for us to remember where are these manipulators coming into place. So we can see that there was a series of sellers showing up here at 1378. Big black line, horizontal. Some lesser peaks shown here a few weeks later, a few weeks later, a few weeks later, a few weeks later, and then once again on the Trump reversal right here in November of 2016. So this region in sum, this 1338 through 1378, this $40 region, we can call this a major confluence of resistance. When you see multiple peaks within the same region here for a single asset class, and we're talking about gold right now, but this will apply for any market really ultimately, although each market does behave slightly differently. I do have to admit that. But when we are looking at these multiple peaks within the same region, we have a very high probability that the next time a market gets into this zone, it is not going to blast higher immediately. So this is how we knew back in September of 2017 that in all probability there would be an interim peak forming here in the price of gold. This was not random. Go back to the videos and look at that. So you can see there were all these peaks here, and then another peak was formed right here in the middle of the 2016 peaks. So we had the back off. We retested the price of gold. What has happened now? We're coming back into these peaks once again. Now, I have studied countless examples throughout history of patterns, human patterns in the markets that take this kind of shape. We're talking about a triangle here, consolidation that broke higher and is now forming something of a ascending triangle. We're talking an even larger triangle. Can you see that with this solid blue line coming up to the black here, extending back down? It tends to take these patterns 3 to 4 times to break through the resistance zone here that we're talking about. So we are right now on the third time. We're right now on the third attempt to do that. It is my best assessment that gold will need one more attempt. And let's look at what the ramifications of this are going to be, which mean that gold is probably going to back off here over the next couple weeks, several months. Notice, I'm not talking about gold going to $5,000 an ounce right now. I'm talking about the high probability scenario that we can observe on the charts from established support and resistance zones. What are some other levels that we can observe here? We can look at the absolute bottom. Nice horizontal level there. We can look at this 2016 bottom right there at 1122, very important level to pay attention to. We can look at this sort of confluence of levels here that formed in the middle of 2017, right? This low and then this low here in May, this low here in June, early July, coming right in the middle. This low that we're talking about here in December of last year. So we've got several lesser lows to pay attention to. The most important thing at this point is this primary rising trend that is the most important trend for gold investors to pay attention to at this time. Huge 6-year downtrend, broken, retested. This line is no longer valid. What trend is? The rising trend. Get ready. This market is starting to emerge into a rising trend. What do I expect going forward? Oh, there's one other line we should look at, which is if we are going to be strict about this, we would have to connect highs. 2016 high through the 2017 high. That leads us into a high right here in the very early part of 2018 that corresponds quite nicely with these multiple black peaks, right? You can see that right here in the middle. Highest probability, therefore, what is going to happen to gold? Highest probability. I can never predict the future, but I can give the best assessment based on observable trends in the market, which is a lot better than some fundamental theory, which may or may not be true this year, next year, or 10 years into the future. Where can we see the sellers actually showing up? Right here in this region. So it looks like gold is going to back off here, coming up soon. I expect the rising primary trend to hold here in gold. We should see something of a consolidation forming in the spring and summer of this year, and things should get very, very quiet and very boring, actually, is what I suspect. Probably by May, June, July. This would actually be the ideal scenario. So basically, what we're imagining here is that most people lose interest in the gold sector right here in the final part of this consolidation that we're talking about. And most people just get tired of it, and they've seen prices go sideways for a number of years, and they just get tired of it. And as a technical-based analyst, there would be nothing more perfect for me. We will be looking at making some significant trades and some deals, perhaps moving into some of the miners that are lesser valued, that will stand to benefit right as this consolidation gets ready to break. And then what's going to happen? We have a broken downtrend. We have a existing rising primary trend. What is going to happen? In the highest probability here, there's going to be a nice big move higher from this summer consolidation. A breakout. This will be a breakout. And there are various levels of breakout. So we can see the breakout from the long-term downtrend. This will be a breakout from this. It'll be something like a 3-year consolidation under the 1378 level. We have significantly higher targets for gold coming up, and I would tell you that if you're still watching and you're still paying attention to the metals here, or if you're in the crypto space and you're looking to diversify, if you're still sitting on significant profits in the crypto space, you're talking about a market here that is still approximately 40% lower than it was in 2011. So there's a lot of value here in the gold space. Some of the miners are still 80% lower than they were in 2011. A lot of value here to talk about. This consolidation is shaping up very clear to see on the charts. This is the massive level of resistance that we're talking about between 1338 and 1378. Best assessment, it is going to modulate here, grind, tire people out here in the middle of the year, and then boom, it will take the least number of passengers possible. Markets always try to do that. They try to fool the majority at exactly the wrong time for their best benefit. If it were easy to stay involved in a market, everyone would be doing that. Everyone is not doing that. Most people are not paying attention to gold at this point, which is excellent. It's absolutely excellent from the long-term standpoint because we're looking at the most healthy pattern that one could possibly ask for in the precious metals at this time. It's really phenomenal when you piece together all of these data points. We provide a research service here, which is for premium subscribers only. This goes out every single week, and this is the backdrop. I've shared the backdrop with you. This is what we expect to be happening in gold. There are going to be twists and turns along the way. So the premium research service covers the twists and the turns that we expect, as well as the gold and silver mining companies that we are investing in here, and all the research to back up those decisions. The mining companies, in case you are new to this, the mining companies are leveraged to the prices of the metals themselves. Their input costs are relatively fixed, and their revenue stream is highly variable, meaning the price of gold or silver. So we invest in these companies for leverage, but you have to be very careful. There are approximately 2,000 gold and silver mining companies in existence. We are investing in 10 out of those 2,000 here, and we're doing so for a reason. So the premium service, about half of that is we publish the miners that we are investing in here. The other half of the service, we cover not only gold like this, but also silver, and we also look at the US dollar and the bond market, et cetera, et cetera. I work with individuals also on a one-on-one basis. We do strategy sessions. I can't tell you what to do exactly, but I can lay out in much more detail all of the research that goes into our analysis here. And I can lay out a set of suggestions for you depending on your situation. A lot of people come to us with a basket of mining companies. People are invested in 30 or 40 mining companies, and they have no idea, are these good, are they bad? We do research on these companies here. So we do strategy sessions with individuals to share the research, which lets people know, in a best assessment, what they are invested in. We also talk about the JNUG, the JDust, all those leveraged funds. Anything that is impacting your personal situation and you would like a unique, independent perspective, someone who does not sell the metals, I simply look out for the best interest of my subscribers. So we're seeing this pattern in gold setting up right now. You could not ask for a better pattern. The cryptocurrencies have corrected, some of them 50%, some of them 60, 70%. If you're sitting on profits, remember that old phrase, no one ever went broke taking profits. And so then you have to decide, what do you do with your profits? Do you put them into fiat dollars? Do you put it into the stock market, which is at a multi-decade high? Or do you look for an asset class that is at a multi-decade low? And we're talking about the precious metals and the mining sector. It's just an idea. Make of it what you will. Thank you. I'll see you this time next week.